Hey Jack, it's me, Ron, of course. Yeah, my Microsoft had to update, and every time it does, it reverts back my audio back to the standard audio input, and so then nothing works. So hopefully, make sure it's all working. Yep, we're good to go. So I know you're busy, so I won't ramble on too much. Um, and my glasses are gone, so I have to take this. Um, So, first things first, I want to explain very quickly the charts so they somewhat make sense to you. Um, Unless you already know about it, and definitely very well could. But these lines right here, the solid lines, they are standard deviation channels. They go off of the standard statistical variances from the average price. So right here, this green line is the average price. 78% of the time it stays within the first deviation up, first deviation down. So if you notice, everything is mostly in here. Here's the second deviation. 88% of the time or so it stays within the second deviation. There is a third deviation on here, but that's a long story. The way I have it set up, it only keep the chart clean. It only prints what it needs to. So here's the 2.5 deviation, then 3, and then there's a fourth one. The fourth deviation, 99.99% of the time, it does not break the fourth deviation, or sigma, it's also called. The third sigma, it's within 95% of the time, it doesn't break the third one. So usually I call this from the first down to the first negative, I call that retail money. So the retailers get caught in this area right here. Smart money, I say, is the second deviation down, and the smart money sells usually within 1.5 to 2 deviation up here, and then they're just patient and they wait. So that's the idea. These I have automatic support resistance in. Now these candles don't look familiar. They're called Renko. It's Japanese for brick. Let's their price. It's all price. It has nothing to do with time. So these two candles could take 2 weeks, and this whole move right here could take 5 minutes. So it's really weird. That was over exaggeration, but what you do is you set it according to the price movement that you want. This is right now. This is set at 0.0025. So every time it moves up 0.0025, it will print a brick. So it can come up, come down, come up, come way down here and get close, come up, and then if you notice right now, it hasn't printed this brick yet, but it's on the way up. And then if it keeps going up, then this will be done moving, and then it will start moving on the next brick. Okay, so that's how it goes. I Most of my forex guys, futures guys, they swear by this. They convinced me to start looking at it, and I absolutely love it. So okay, enough of the background. I'm probably boring you to death already. I'm sorry about that. WHSI, it's definitely down below the smart money line here. Getting it looks like it bounced. There a little bit of support right here, and then it definitely broke this support line right here. That's another thing about Renko. It definitely makes support and resistance look very, very easy to see. And we are coming up to somewhat of a support right here, or resistance right here. Another thing about the deviations, they act as support and resistance. The dotted lines are half deviations, so that'd be 1.5, that'd be 2.5. They also act as support and resistance, but not as much as the solid lines do. Right now, this just broke right through it. Usually, what happens is once it breaks support, bears like to try to push it back down, and then you get that's your retest, and then it breaks through, and it usually likes to gravitate toward the next deviation, which here would be the -1/2 deviation right here. So I'm seeing WHSI at least going to probably 0.209 before we see a retest of it or breaking through a retest and moving up to the average price, which is 0.245. So this is the yearly chart. So this can take a while. This one right here, this was all done on the 12th. And yeah, from here all the way down, all the way up on the 12th. So, and then this movement took, I mean, look at that, just right here is April 18th. So not too much movement. Now we're starting to see some movement on this. So, and we're getting close to, even though I don't really care for SMAs, I have it on for teaching and a lot of the stuff I haven't taken off. I usually have a clean chart. This dark green line, I just want to show you this real quick. That's called the anchored VWAP. It's not the regular VWAP. It's anchored, and it's anchored to the candle that has the most volume on the chart. So that's, I call it the money line, because when it usually breaks this, it usually has a significant move. Usually, not all the time, but it did break it, and it started another candle on top of it. So that's a good sign. Now, I'm not a financial advisor yet. I'm still working on it, but you know, I want to give you the three scenarios: up, sideways, or down. And this really not too much consolidation here. Overall, this is all consolidation though on the 3-year chart. So really, you know, we'd have to break here to really get it going, because if I remember on the 3-year chart, it was off, you know, it was way up there. So I could see why you like this this stock. I'm new to this one. I just looked at it for the first time when I did that first silent video. But I don't know where you are in on it. I should have asked you that. But if you're anywhere around this area, 0.2 or so, it's worth holding. But if it breaks below the 0.126 mark right here, we're probably coming down to 0.0075. I personally, on longer plays, I like to have a 10% stop loss. And just get out and wait for it to finish and then get back into it. That's just me. So that's what I have on WHSI. Let's see here. AABB. We have average trading range of 0.084. And what we do here in Rinko is do the average trading range divided by 2. So that'd be 4.2. Okay, I got 4.8 on there. That's not right. All right, so here's AABD, Asia Broadband. I love this stock. I made quite a bit of money right here, and then I think it was in September. Yeah, a little bit on that move right there. But it's definitely here we go. Around 95%, it doesn't break that, and sure enough, look at where it stopped. Boom. So now here's the fun thing. I don't know where you're in on it. I hope you were down here, not up at the 2.2 area, but hopefully somewhere around here. It's definitely took a nosedive here. It's called the falling H bearish pattern. And usually that means it comes up and then forms another H. So just be careful about that. It definitely could do that. It's kind of done it before. Here's an H right here, and then it forms the hump, and then another H. But this is down, like I said, up here. You know, it usually doesn't get above the second deviation. So now we're down at the second deviation. If you notice, this barely dipped down below it, and here's the support. It broke the horizontal support, as I call it, but the deviation support down here at the second sigma, it looked like it, look at that, perfectly bounced right off it. We're close to the 9 SMA here. So I could see this getting, you know, bouncing at least coming up to, we might have some turbulence here, but I would imagine we at least get to 0.898 area. We might dip down, and then this would be support, and then come back up, break that, and come to the upside. That's what I think is going to happen, because just being down this far, um, this would be a great time to get in. If you're under and you want to average down, I usually don't subscribe to that. I like averaging as it's going up. I average up, and that's buying the dips. Buying the dips isn't as they dip as you're going down. It did break the main downtrend line though, so that's good. Got rejected, and funny where the average price and the money line is right there too. Very, very important. If you can get that, that'd be awesome. It's gonna take over moving averages, I believe, probably in the next 20 years. With that said, I think that this is gonna make a move up. Overall, as far as how long it's going to take to get to the average of 0.17, it depends. It could be midsummer. But I definitely think that this is on the way up. GGII, oh boy, love GGII. I haven't traded it for a while, but let's see, 67 cents. Oofda, how can that be? Okay, I'm just going to move this down to 30. 003. That boy, I don't know about Thinkorswim on that one. I'm just going to use 30 cents as for GGI on this. The average trading range is 67. That'd be 30. I'll do 33. Sorry about that. I should probably pause it and do all this. I'll do that in the next couple of stocks, so I don't take up too much of your time. Okay, we're in the downtrend. This is the average price right here. It hit, bounced down, hit, came back down again. And now we're about at the -1 deviation. Oh, I did do some work on it here. I can't remember who asked me about it, but we are, it might get down to the -1.5 deviation. So we're looking at negative, that's negative area. So I don't know about that. These wrinkles are too big. I think I'm going to go down to 10 just to see what's going on here. Okay, we're at 001 right now. So, yeah, definitely uncharted territory as far as horizontal support is concerned. And again, here's the average price. We do have support here at the -0.5. This would still bring us down to 00 average. So we're in a sticky wicket here. This is oofta. Now the VWAP, this is good news at least, because let's see if I could bring this up to 20. And I want to show you something here. It should be on the bottom now. Yep. Okay, this is good news. So when the VWAP is down, this is another VWAP. This is the VWAP from the highest candle on the chart, and there's a blue one that's just starting here too. This blue one, that's from the lowest on the chart. When the high volume VWAP is at the bottom of the chart, usually that means a really nice run. Not right away, but if you just stick with it, it should be coming up. Vice versa, when there's the highest volume VWAP is at the top of the chart, that's usually bad news. Like here's the VWAP from the highest candle, it looks like that, and you're going down. That's usually a sign of a downtrend, especially on the yearly chart. 3-year chart, I do a lot of looking for VWAPs that just hit at the lowest on the three-year. That's a nice long run. I did that with AR, and AR I got in at 450. It ran to 38 bucks, so that was a good one. And Taro, but So this is just starting out. So good news. Maybe if I was you, I might put some more in it if you're under. It might take a while. It might dip back down here again, but I see this uh, the finally moving. It's not in a stage one reversal pattern yet. We still have lower highs and lower lows. That's not good. But I mean, if you were really conservative, I would wait for it to break, uh, 0139, and then set a higher low here, and then get in. That'd be a stage one reversal, going into a stage two, which is a bullish stage. But this is definitely that's a stage four. This is a stage three, which is a reversal pattern on the upside, and then boom. So we're looking for something now, a stage one, and then on the way back up. So that's what I have for GGII. KYNC. We have that's a difficult one here. KYNC. I'm going to move that down to 10. This really doesn't move that much. Okay. Well, we have the anchored VWAP, not at the lowest, but pretty low. If I move the bricks up to 30 cents, that'd probably be the bottom candle. I just wanted to move it down a little bit because there hasn't been too much movement. Yeah, there's my buy target right here, and it went down, but then we ripped. We made a lot of money on KYNC there on the Moon Market Discord. We have a double bottom here at 002. This depending on where you're in, I hope you're underneath Lee 0133 area here. That's the average price, because if you're in around here and you're just holding bags, this might be a while. We're in the midst of, again, in a down stage two. Stage three reversal pattern, or stage one reversal pattern, where we're bottoming out. We might consolidate, and then we might have to wait a while for it to get above, the 014 area. But that'd be a heck of a way to do things. But right now, we just are bottomed out. This might be a good time to get into it a little bit, and if you want. But I'm conservative. I believe in the first mouse gets the trap, the second mouse gets the cheese. I would rather be in and get in right here, as it's coming up, breaks a previous high, and then comes back, hits support, and setting in a higher low. I like to get in there and then enjoy the rip up and just move my stop loss up after it sets another low. So, this one's tricky. It's something to keep an eye on. You get down below the 002 level, then we definitely, you're looking at it going down quite a bit. So that's what I have with KYNC. Overall, that's what I have for those tickers. Two that I want to show you that I did on my video and on Moon Market here, is PSWW. I'm telling you this because it's just started the move. I honestly think that you could get an easy at least 25% out of this. And reason being is, yes, we're in a downturn right here. I did make I made around 150% on this before, and it's looking like it's ready to go again. Here's why. This is probably around a 10 day to 3 week type of run, but every time it hit 2 cents, boom, that's gone up 50. It went up 50%, came back down, went up. This is 100%, and then it came. Now this could come down here. But once it hit 0.15. That's a 407. I think it was 470, 453% move right there. Came back down. Look what it did. 0.2. It went up 150% or 100%. Came back down. Went up 50%. Came back down, and now we're starting to move back up. Now again, Renko, it shows you the price, but again, it will not print until it comes up here. So it did bottom out right there. I got in a little late at 0.21, which ticked me off. But that's a long story. I had a golf lesson that I had to give in it. It always happens. But so we're looking at least another 35%, I believe. So if you get in Monday, that's why I wanted to redo this video, just to let you know on this, to get an idea. If PSWW takes a big dip Monday, I would get into it. But this has 35% probably move to it, minimum, I believe, if it continues to go according to the pattern. And another reason why I like this, here's the downtrend. Okay, the money line was down low. It came up, and once it hit that money line, boom, it crashes. But the downtrend, I'm sure is, especially with the OTC, it gets closer and closer to this downtrend. A lot of people wait for it to break the downtrend, and then what happens is they're waiting for it. I know that the conservative play, I just told you, I always do, except when it gets down to a downtrend, because a lot of times it breaks and then you miss the move. So this is getting awfully close. Yes, it could come up here and then come down one more time, quadruple bottom, and then make a big move. But I'm going to be conservative. I'll probably take out half when I get up here at 50%. And then if it breaks, then I'll just put more into it and let it run, because it definitely, I think if it breaks here, this is that negative 0.5 deviation is probably on the way up to the average. So the average right now is 0.5. So that'd be a hell of a move just right there. That would be about 137% jump right there. So I think that would be. In this stinking bearish market, even though I'm killing it on the SPY with my puts, and Ford and Uber, I've just been killing options. So, but that's what I have with PSWW, and one that looks very much like that is FUBO. FUBO on the one year. And I got to get the Renko set up. I think I have it set at 28. And here we go. Went just about to the second deviation up. Now it just about went to the second deviation down. This is the yearly chart. So it's close to the 100 moving average. It got rejected every single one of these times, but we're pretty much at the bottom. And here's the important thing. I won't get into this stuff, but double bottom, but we have the major the money line being formed, the highest volume right at the very bottom of the chart. So I am thinking. For a minimum, especially, I think it just broke over the 9, the 20 SMAs right here. If it breaks, we could see a little bit of a retest, but I'm getting in Monday. And I think a bare minimum, it should get up to the average price, which is 784 right now. So we're talking quite a big move. Let's see here. Not to the average price, just down to the -1 deviation is 175% move. Somewhere around there, 167 or so. So I thought that I would let you know about that. There is some resistance at 619 and 657, but I think that FUBO has a good chance of doing well. If definitely have a stop loss. I'd have a stop loss at 285 right now, but it's already starting to print this second candle. Doesn't mean it that means it's going to come up here, but I mean, here's some resistance right here at 368. So we got a little, maybe wait till we get past 368 and then make a move up, or we could, this could come back down to 315, somewhere around there, and 315, and see if it retests that money line, and then if it bounces off the money line, then for sure this thing's really going to rip. So I thought that I'd give you a heads up about that one, and enjoy making some money, which I'm sure you do. So with that said, Jack, I hope you are doing well, and I hope your golf game is doing well, and excited for that also. And take care.